In this week's markets update, positive sentiment has continued to build as equity indices around the world hit all-time record highs. Now, some of this feels fully justified on the jump in US earnings and positive data released through the week. Retail sales in the US came in well above expectations, and one regional Fed measure of activity in Philadelphia hit the highest level since 1984. The good mood also seems to have drawn on President Trump's promise of a phenomenal tax plan. Now, it remains to be seen to what extent such a plan is delivered, but President Trump will address a joint session of Congress on the 28th of February, and financial markets will be watching very closely indeed. Janet Yellen testified to both House and Senate, and she retained her upbeat outlook on US jobs and inflation. Pricing for the next Fed meeting in March firmed towards 40%. The Westpac still expects the Fed to wait to June and December before hiking rates further. While this run of upgraded guidance and better economic data would normally see the US dollar appreciate and bond markets under pressure, US 10-year yields remain in well-rehearsed ranges, 230 to 260, and the US dollar has failed to garner much support through the week, and we expect that to continue in this coming week. Here in Australia, the mood has continued to improve. NAB business confidence and Westpac consumer sentiment both lifting. And while the headline employment report was slightly disappointing, employment rising only 0.9% on an annual basis, we did see the unemployment rate drop to 5.7%, and hours worked within the Australian economy has increased 0.8% in the last 2 months. Commodity markets also remain upbeat, with iron ore holding for above $90 for much of the week, and we're hearing reports of significant infrastructure expenditure announcements in China focused on road, rail, and logistics. That supports steel demand in China and should continue to support commodity markets. This positive picture has helped the Australian dollar trade above 77 cents, and with the US dollar failing to capitalize on better domestic data, it feels like this story continues through this next week. I still think, though, the Aussie dollar should be capped somewhere between 77 and 78 cents, and Westpac continues to forecast lower levels as we move through 2017. We do have a modest amount of domestic data this next week, with Q4 capex and investment intentions due later in the week. This week, we also have a number of RBA events. The RBA minutes from the last meeting will be released on Tuesday. RBA Governor Lowe speaks at an event in Sydney on Wednesday, and again at the House of Representatives on Friday. These are all factors we can talk about in next week's Markets Update.